Good morning, everyone. My name is Mike Renick. I'm the senior broker, the team lead of Team Renick Real Estate Services. We're part of that great Keller Williams on the Water Sarasota family, serving Sarasota, Bradenton, and the entire west coast of Florida. Welcome to the Mortgage Insider. This is the October 9th edition. My guest today, as it will be every Tuesday going forward, is Christopher Kiblin. Chris is the Vice President of Mortgage Lending. He has over 20 years experience in the finance mortgage industry. He has fine-tuned his customer service skills to the highest level. That's the thing I like about Chris. Not only does he have great programs, he believes as strongly about customer service that we do. He offers Manatee and Sarasota County home buyers unbelievable service. His promise to you is to give you a low rate on the right mortgage product, along with transparent and fair fees. They leverage cutting-edge technology to streamline the process and simplify every step and provide unmatched service and expert advice to help you through the entire process. So if I hit the right buttons here, Chris will be joining us momentarily. There he is. Good morning, Chris. How are you today?
Good morning, Mike. How are you?
I'm doing great. I'm watching my namesake as it comes up the Gulf of Mexico. Michael has been turned into a hurricane. And believe you me, if I could stop that thing, I would. I don't like that, but hopefully that'll get by and people will be safe.
Exactly.
Welcome to our second show. You did an amazing job, and you agreed to come back and work with me again. So I appreciate that, Chris. You really do have a unique approach to the mortgage lending industry, and I want to thank you from the bottom of my heart for being a part of this.
I appreciate it. It's great to get the message out, and try to be unique and get those out to all the clients and people out there to give them better understanding of what we're trying to do. And, more knowledge is key for them.
I absolutely agree. So today, a couple of topics. You're going to bring us up to date to what's happening with rates. Things are changing in my Monday market update. We're talking about that already. It's definitely going to impact the mortgage. And then after that, we'll go into what condotels are. Is that do I have that correct, Chris?
That is correct.
All right. Why don't you go ahead and take it away?
All right. So really, I want to talk about rates briefly here because our market is starting to shift a little bit. We're seeing rates go up quite a bit here lately. And what I wanted to talk about is be prepared for it. If you got a client or you're a customer that's been pre-approved and you might be looking at a certain price range, and that rate is now more than what it was before. Let's say it's going up a quarter point, a half a point, whatever it may be. You might be affecting what you can now afford. So you need to go back to your loan officer, your lender, and talk to them and make sure that you still qualify for that house. Because here's the thing. So as rates go up, if they went up a half a point, you may not, and you are right on that teetering line of what you qualified for, you may not be able to purchase a home as expensive as you were trying to purchase before, because now maybe it's $25,000 less, and so if you were pre-approved before for 200, it might only be 175 now. So, and you're still looking at $200,000 homes. So rates have a big impact on that. So that's why I highly suggest if you have somebody who has been pre-approved and they've been sitting on the fence, and let's say it's been 3-4 months and they just still are shopping, they need to go back to their lender and make sure that they're still qualified for that amount. Big deal.
That's great advice. We hadn't seen this kind of a market in a long time where they're steadily inching up. Is that correct?
That is correct. We've had almost a quarter point to a half a point adjustment just in the last week.
Okay.
So we just want to make sure that's all,
Yep. Thank you for bringing us up to date with that. With regards to condotels, a condotel is nothing more than a condo, a townhouse, or villa, part of an association that allows short-term rentals. And as a buyer, it doesn't matter whether you plan to rent it out or not. The fact that it's in there means it goes into a different program. And can you share with us what that would be, Chris?
Sure. So like a condotel is something that it's almost like just what it sounds like. It's a condo that you own as a unit, but it's a hotel. It has a a front desk where you go in, you sign in, you have a cleaning service, and it's something that the owners of those units, they can rent out weekly, daily, whatever it may be. And so it's a little bit different. It's almost like a hotel, but owned by owners. So if this is something that you are looking at and you're looking to purchase because this is something that you want to use for an income stream, but then you want to use it to where you come down for, use it for 2 weeks, 3 weeks or whatever. And that way you can still do that and still use it as an income stream. It's very big, I know, on Longboat Key, Siesta Key, and those types of areas. And so, a lot of the places over there are going into this type of model. So, the thing that we wanted to discuss was what it takes to get into a condotel. There's different things here that we need to discuss on them, right? Okay. So I'm just going to go over my notes here real quick. So basically, there's no state restrictions. We can do them anywhere. The typical loan size is anywhere from 100,000 to 300 million. So it's a pretty big difference. So you can find nice big ones. We do up to 80% loan to value on owner occupied and second homes. If it's not an owner occupied, then you got to put down 40%. So if you're doing it as an investment property or something like that, okay, it's got to be 40%. Okay. So it is also what we call a limited review. So what that means is we're not going to go in there and really beat up the books too much. Like, so, we're going to get a copy of the budget from the condo association, but we just kind of want to just make sure that they're doing what they need to do. But it's, as long as there's no like pending litigation, they have enough insurance and they're not mismanaging their money. That's what we're looking for. So, one of the other things is that they do same building comps, only one appraisal required. So you can use whatever title company you want. And there's different ways to figure out a way for income, because we might even be able to use some of that income, depending on what it is, to help offset what you're trying to purchase. Okay. So you can get up to 6% seller concessions on those. So if you were going in and you were purchasing that and you needed some money or you wanted to ask the seller for seller concessions, you can do that. And we can close some of these, depending on how quick they are, anywhere from 2 to 3 weeks. So it's very quick process as long as the client and the condo association is working with us. Okay.
Chris, what would the interest rates typically be on a loan on a condotel?
So they are a little higher because it is more of a risk to it. So anytime you add risk to a loan, it causes the rate to go up. I mean, probably somewhere in the neighborhood of like a 6 to 7% interest rate.
So is that 1 to 2 points higher than we normally would see in the market today?
Exactly.
Okay.
And it all depends on the customer's credit score as well. But that's going to be typically, when you add risk, and these are a little bit more risky because of the fact that, it is a condotel. There are some other things, The biggest thing that we see here, especially in the state of Florida, is, when we had the crash in 2008, a lot of people, what happened is that they gave up their condo, right? So they're a little bit more strict when they come to condos in Florida. And that's because of what happened was everybody said, well, I'm not going to, I'll just give up my condo in Florida. I don't need that anymore. Or I'll stop paying my condo fees. I don't need that anymore, because I can't afford it or whatever happened to the market. So they are going to be a little bit more strict in that. That's why you're going to see a little bit more of a price increase on that rate. And it is a portfolio loan. It's not a traditional bank loan program. So it is something that there's an investor that's going to invest into that. So
there's really 3 points that I think are important for consumers to understand with these kind of loans. The down payment the requirement will be higher. The interest rate will also be higher. And the third and the most important thing is understanding how complex this is. The most important thing you need to know is Chris's phone number to reach out and ask for help. Chris, what's your number?
It's 443-668-5727. I'm always available, so you call anytime.
And it's important to have someone experienced on your side working through this kind of loan. They're not necessarily easy, and you need an expert in the driving seat. Do you agree, Chris?
Absolutely, because there's a lot of different things that you got to look for. You got to understand what you're doing. The thing is that it's not an easy loan by any stretch. It's not your typical, like, I'm going to purchase my house, my new home that I'm going to live in. There's a lot of other things that you got to look for. And there's a lot of other things that we got to prepare ourselves for. So yes, absolutely. You need somebody who's been down that road before, because it can get tricky.
Chris, another fine job. Week 2 is behind us. You're amazing. I really want to thank you again for this partnership, working together to share what's important to consumers and other realtors who have consumers looking for products that you offer. Again, thank you.
I appreciate it. Thank you for having me.
We'll see you again next week with a new topic. Take care now.
All right. Bye-bye.
Thanks, Chris.